Good morning and welcome to Inspiratia's Financing European Renewables Challenges and Opportunities webinar. We are here to set the scene and open the debate ahead of our Financing European Renewables Summit, which will take place in Madrid on 16 May. Joining us today, we have a broad range of industry experts who will help us map out the investment horizon, identify opportunities and flag challenges in the fascinating and ever-evolving world of renewables in Europe. Welcome to Fernando, Salinas, Iberia MD, FRV.
Hello, good morning.
Stefan Vatchev, Corporate Banking, CIBC Capital Markets.
Hello.
Giulia Noli, Director, MetLife Investment Management.
Good morning.
And Pablo Echenique, Partner at DLA Piper.
Good morning, everyone.
Good morning and welcome again. So let's start with a fairly open question to kick us off and set the scene. So a nice and easy one. What does 2024 hold for traditional renewables? Giulia, would you like to kick us off with this one?
Yes, of course. Hello, everyone. So from our perspective on the lenders market, we really expect the trend of the last 3-4 years to continue, and we expect to see a sustained pipeline of ready-to-build greenfield project to come to the lenders market with a variety of structures, really, from the standard project financing to platform financing, I guess, as developers ramp up their pipelines and government push, obviously, towards reaching their renewable penetration targets. On the one hand, so we expect sustained pipeline of greenfield. On the other, I guess higher interest rates are not ideal for refinancing, so we do expect a sort of slowdown in terms of refinancing of operational projects. I guess we're also monitoring closely updates on the policy side and how developers are reacting to cost increases and supply chain disruptions, as we anticipate that without better visibility for developers on permitting processes and grid connections and construction timelines, obviously more projects could get cancelled. And as a result, if project gets cancelled on the developer side, obviously there's a slowdown of projects coming to the lender markets as well. So I guess in a nutshell, these are very much the trends we expect to see this year.
Thank you, Giulia. And on the interest rate point and possibly on the supply chain risk point as well, I was wondering, Stefan, from your perspective also as a lender, would you agree with that? And how much do interest rates and continued inflationary pressures will continue to play a role? And what's the expectation there in terms of like what the central banks in the UK and Europe will do going forward? Bit of a crystal ball question, that one, I know, but yeah.
Yeah, I fully agree with what Giulia said. We observed that in 2023, and we continue observing that in 2024. The supply chain issues, the higher rates, but that has led to a few consequences of that. Clients have used DCH, dual contingent hedging, a lot in the last 24 months to even pre-hedge for interest rate exposure. And then we also see a lot of other hedging, let's say steel hedging, being done. And we also see simpler technologies being more prevalent. Rather than offshore wind, we see onshore wind, we see a lot of solar. Hopefully that answers your question.
It does, definitely. And Fernando, perhaps from a developer's point of view, we've heard there's an expectation from the lenders here that the pipeline will be sustained across the traditional renewables spectrum on the greenfield side as well as refis. What's your perspective?
Yeah, certainly, Viola. So I think Giulia did a great job in putting the points on the table. So the thing here, what we see is that we see Europe setting targets for 2030 that are pretty ambitious, no? And I think all countries are basically taking that idea and putting the regulation in place in order to get there, no? So I think 2024 will be a year in which we will continue growing in terms of solar and wind and traditional renewable energy. I think that there's something that will come up as well, which is batteries, which will help the integration of more renewables in the grid. And that's something that we will see more and more happening in Europe, not only in UK that we're seeing right now, but also in other countries, such as Spain. Well, hopefully right now we have a missing money, but a regulation will probably come to help us introduce it in the near future, so we can actually install more renewables in the market. But not only in Spain, we're seeing that in Italy and others as well. But I think those are the main drivers, no? And obviously it's very powerful, the regulation coming from Europe, no? And that has set the scene, and that will be the main driver, I would say.
Viola, may I ask a question to Fernando, because if it's okay?
Yeah, absolutely. Go ahead.
Fernando, we also see batteries coming very much into the market, but do you expect that to be more on a standalone basis or more on a co-location basis?
It's a great question, Stefan. So I see the renewable projects that are existing today, making them hybrid. So taking profit of the existing connections. I see that'll be the first step. And I also see standalone projects nearby the cities, no, where there's a lot of consumption. And I think that's what really makes sense. But those investments won't be done if they are not economically sustainable, no, and that profits cannot be made from those projects. And today, the problem that we are seeing in most European countries is that the batteries are not profitable enough to drive investment, no.
Thank you. I could see Giulia nodding a lot there. Do you want to give us a bit of your perspective on battery and battery storage?
No, I was very interested in the answer, in Fernando's answer, because from a lender perspective, we have been exploring a little bit. We've been presented opportunities in the battery space, and while we didn't really manage to get comfortable with projects on a standalone basis, we are hearing more and more opportunities around co-location strategies. So very interesting point, and I guess it's something that we're also actively working on to try and find ways to support the sponsors into the sort of co-location strategies.
Thank you. And Pablo, from a legal perspective, a legal advisor perspective, same question, but also a bit of what does 2024 hold for traditional renewables for your clients? But also I'm interested to hear, given that you have, overview and access to a broad spectrum of players, what's their deal pipeline made up of at the moment in terms of like renewables versus new technologies at present?
Okay, thank you, Viola. Yeah, I agree with my colleagues that 2024 is going to continue to see some transactions, some big cap transactions. The pipeline is sustained, and there are a number of competitive processes open now. Investors, both foreign funds and big local utilities as well, remain interested in growing their traditional renewables portfolio, especially PV solar, that in Spain is clearly the star in renewables. Wind portfolios are less abundant, due mainly to, in my opinion, two factors. their development is longer and tougher due to higher environmental and social constraints traditionally in Spain, and also the capex needed for the projects. That is much more than for a plain vanilla PV plant. And then there are also, and Giulia can agree or not, there are concerns on bankable turbines that make some investors discard certain names. And as to the second piece of your question, I would say that 80% of the transactions we're working on concern traditional renewables, as new technologies such as hydrogen are what McKinsey calls the Horizon 3 technologies. They still need lots of R&D investments, and they don't generate much cash flow. So the stakeholders around hydrogen are still testing the market to see if there will be enough off-takers for the technology. And more importantly, the big question now is about the future grid. What will the future grid look like, and who is going to pay for it? And then I would also mention that offshore wind is going to be a trend in the coming years. The government is preparing important pieces of legislation pursuant to the offshore plan and the national climate plan that will clarify things. And again, here, environmental as well as technical issues will be key drivers that might condition future investments.
Thank you. And to the same questions in terms of how much of your current activity, from obviously different perspective on the market, are, in traditional renewables versus new and emerging technologies. Is it reflective of what Pablo just said from your perspective as well? Who wants to start?
Yeah, maybe I can go this time first. Yeah, no, I think that's right. Traditional technologies in the case for a lender even higher than 80% in our case, but we are exploring totally new technologies. We've done 3 standalone BESS deals last year in the UK, and we continue exploring opportunities on the continent. We are very actively exploring what's happening with hydrogen, with carbon capture and storage. But from a senior lender's perspective, most of these opportunities are a couple of years away. Same, for instance, for floating offshore wind. This is another sector that we are very actively following what is going on. So that's from our perspective.
Yeah, perhaps from my perspective, if I may, Viola, talking about traditional, I think it's what's going to be driving the investment during 2024, but non-traditional renewables, and also demand based and a hydrogen and perhaps as well data centers. I think demand is going to be key in the following years, and linking with the point that Pablo Echenique just raised, which is the grid, and how the grid is going to be evolving. I think it's going to be key in order to be able to integrate all those renewables that demand grows over the years, and we're going to be seeing low prices. Low energy prices, which is also great in order to be able to call for more demand, but also we need to integrate that demand in the grid, and hydrogen. Those hydrogen projects, a lot of them are multi-megawatt projects, perhaps 1,000, 2,000 megawatt projects, and to integrate that in the grid is going to be a challenge. But also, if you integrate a lot of new generation, consumption will be needed in order to be able to capture reasonable prices. So I think all that together will be needed somehow, and each country needs to somehow see how that is going to be evolving over time. So grid is going to be key in order to be able to accept new demand, which will be needed or will come from hydrogen and others.
Yeah, I agree with Fernando, if I may, that demand is key. Demand, and then the reinforcement of the grid. Those are 2 key factors that have a deep influence for the future.
Totally.
And if I can jump in there, So from our perspective, investing in renewables, it's not just investing in the actual assets, but it's investing also in those ancillary services. So for example, we invest into service vessels, which are key, obviously, for offshore wind farms. We invest into interconnections, into the grid, into the transmission systems. So we see all of those investments very much linked to the energy transition, and very much also supporting again a gradual increase in the renewable penetration. But we do see that as key and something we actively invest in, and always seek opportunities, always seek new opportunities.
Yeah, thank you. I was gonna ask about that, actually, about how much, what other sectors that are not perhaps, exactly defined as traditional renewables, but are kind of like tangential and adjacent to it, and they support the development of traditional renewables, and which ones are out there. And definitely, like, the role of the grid is one that we hear a lot about, and all of those like interconnectors, transmissions projects are definitely keeping us busy on our end as well. So it sounds like there's not an expectation for that ratio between traditional renewables versus new and emerging technologies to change throughout the year. It sounds like everyone on the panel very much expects the bulk to remain on traditional renewables. So if we could perhaps drill down a little bit into that realm and say, which traditional renewable sector is set to offer best opportunities, most opportunities in 2024, and why?
You go ahead,
Well,
Fernando.
Giulia, go ahead.
So I think from our perspective, very briefly, it very much depends on specific locations. So we think that there are probably assets which are more in demand, and so we see stronger pipelines in some location, and some other assets where we see again more opportunities in other locations. So for example, I think Southern Europe, we see a lot of solar PV opportunities. We used to see lots of wind developments in the Nordics, although I guess there's one topic is potentially the overcapacity in the onshore wind space. So I think it's very much location dependent. Yeah, I'll pass it over to Fernando.
Well, look, I think similar. No, I think we won't see many changes in what we've seen over 2023. No, I think solar will be probably the leader in energy installed over the southern countries of Europe. Even though right now we're seeing very low energy prices, and the capture prices for solar, specifically in Spain, will be even lower in the future, in the next 1 to 3 years. And that happens because a lot of solar is coming online. There have been a lot of permits granted for solar, and capture prices for that particular technology, since they actually produce at the same time, it's are going to be low. So there will be a challenge for the developers to actually make the numbers work, and get some leverage for the banks as well. So that's going to be a challenge over 2024, 25, 20, and so on. But I would say there's a tendency of right now, there's some deadlines that the developers need to meet. Here in Spain, the Royal Decree 8 2023 was published, and we have 3 more years in order to be able to integrate those projects into the grid. That has some positives and some negatives. But what we are seeing is that a real avalanche of projects, of solar projects, will have to be built before 2028. Some of them will come online and will succeed, some others won't. And so I think it will be the mechanisms created potentially by the government of energy tenders will be key, because right now PPA markets are not quite there. They are at very low prices for pay as produce. I'm talking about pay as produce solar. No, so are very low, and some numbers do not work. No, so that's how I see it in working. In terms of wind, I think wind has a better possibility because the capture price of wind is actually higher, and they won't have as many problems as solar. But as I think it was Pablo that mentioned that developing a wind farm is actually harder. No, so that's they're more complicated for them to come online. But they will be any project that is permitted and ready to build will probably be financed as well.
Stefan and Pablo, would you agree with that overview?
Yes, definitely. I think that due to the facts already mentioned by my colleagues, by Fernando and Giulia, this year we are going to continue seeing the same ratio of investments because new technologies, for the reasons already pointed out, are not mature enough in Spain. Maybe storage, batteries, and we have also mentioned them. If that can be considered as a new technology, they will develop faster, and we will see some transactions with batteries. We are already seeing transactions with batteries, both standalone and hybridized, with existing or new projects. In any case, we will begin to see big transactions around hydrogen and green gases, and also some offshore wind projects in the coming years. We are already working in some joint ventures between international investors and Spanish engineers around hydrogen. But in a nutshell, I think that the ratio won't change significantly.
Yeah, and I fully agree with that. The only thing which I would add, what we are starting to see, speaking of traditional technologies, repowering. We are seeing our first clients going into repowering some old 20, 25-year-old wind farms, and it will be a very interesting process because these clients require the same way capex as new wind farms. But what they benefit from is the fact that since these were some of the first ones to be built, they're usually put in the best places in terms of wind resource, and then also they benefit from existing grid connections. So it will be a interesting development, and we do expect an increase in the pipeline from repowering, in particular in the wind space.
Thank you. And what do we think of offshore wind? I mean, there's a lot of tenders being announced, but there's also obviously a lot of headwinds and a lot of potential issues there. We're hearing on a few of them that some of the joint ventures and consortia that were going to bid and submit their biddings, they are now withdrawing, citing cost pressures predominantly. What's the outlook from this panel?
We have financed a number of offshore wind deals, so maybe I can start because I have been following this market since 2013, and the reality is, in particular for Europe, offshore wind is required, is needed, and the market will continue growing. Did it go to some difficult time during pandemic where fabrication was slowed down, and after the invasion Ukraine leading to supply chain issues? Yes, it has. Has there been some well-known and publicized problems? Yeah, but there continues to be very strong appetite amongst lenders for offshore wind, and we saw that on Baltic Power, which is the first Polish offshore wind deal last year, which achieved pricing and terms commensurate with any other Western European deal. And there are a couple of other Polish offshore wind deals which are coming to the market this year, and again we see the same appetite across Europe. So my view is, notwithstanding the short-term problems, the long-term prognosis for offshore wind is to continue going.
If I may, well, Giulia, sorry, again.
Sorry. No, I was I was just about to say that I fully agree with Stefan. We have some exposure in the offshore wind space, and we do expect, potentially to do more in that space going forward. Obviously, as lenders, when we hear about cost pressure and potential delays during constructions, obviously what we look for then is to some extent enhance the structural features. So we may look for incremental liquidity or a reserving mechanism that springs up when something is not going quite as planned. So I think there are ways for us lender to structure around concerns and get comfortable with something that is structurally needed, and we know that it's needed, and so we have a sort of I guess long-term strong view on the asset and the sector.
Yeah, so if I may, so regarding offshore, we are not involved in offshore, but I see three main barriers, and I'm thinking about Spain here. So the first one is economics need to work. So capex is going to be higher, resource is going to be higher as well, but we are seeing challenges in having competitive PPAs need in order to make your project profitable. No, so that's the first challenge. The second one is connection. So in Spain, basically has really no connection available. We do have more than 100 gigawatt of PV and wind solar farm interconnection either signed or requested, and most of it signed, with a demand that is actually decreasing, and with many megawatts to be done over up to 2028. So how do you actually fit more generation into the grid? So it's going to be difficult. And my perspective is that basically government need to actually see where the scene is before granting any more new connection. And the third one is actually policy. So policy in sea waters, and it's not going to be easy. I think Spain has actually given some steps forward, and they are actually trying to solve the problem. And there are some developers, but I would say that policy is still not quite there yet. And they need some support from policymakers in order to be able to make the projects happen. But the first two, which are basically, interconnection. I mean, obviously, there's no demand, and there's a lot of projects ongoing in order to be able to connect. And second, numbers do not work. Well, that's going to be a challenge, no?
And Pablo, what are you hearing from your clients? How much is offshore wind keeping you busy, and how much do you expect it to keep you busy going forward through the year?
Well, I think that what Fernando just said is very important, and those barriers are important. The connection and the very big capex needs. In any event, the government, as I said, is working on a project for a royal decree, especially focused in offshore, that replaces the existing one, and this is quite unusual, because the other traditional renewables are governed by one single royal decree that covers all of them. So I would just say that I fully agree with what Fernando said.
Thank you. And we've touched already a little bit on PPAs and the role that they play in supporting the development and the financing of traditional renewables. And perhaps I'd like to go a little bit more in depth there and ask you how is the PPA market evolving, and how will it contribute to shaping the traditional renewables investment landscape?
Over to Fernando, the IPP. And to Pablo, we as lenders, we just see the PPAs when they able to sign those.
Well-
Fernando, I believe you're muted.
Yeah, sorry. Yeah,
Sorry.
here. So yeah, the PPA market, I mean, we've seen a quite active PPA market over the last couple of years, where actually energy prices were very high, no? And not only governments, but also big companies were really willing to actually hedge their energy over time and try to capture or pay a lower price, no? Right now, PPAs are becoming more a challenge, no? They are more driven by companies' objectives or company targets to reduce their carbon footprint, and which makes sense, no? And many companies, they do have their own targets and that they want to really fulfill, and that's what really driving them. Is not really that economic. It's not an economic driver, no. But how the market is today is that driver is actually the one that is leading the one that actually of signing PPAs, no. What is driving that target? Because we're seeing very low prices, no, and PPA prices are coming down, and that's becoming to be a challenge for many projects to make them profitable, no. Obviously, the more competitive ones, the ones that really have a very a great solar irradiation or basically a big wind resource, they are having less of a problem, no, with low prices. But the least competitive ones are having some problems to make them profitable, and really being able to making them happen, no, happen. Merchant risk, developing trying to finance a project on a merchant risk basis is becoming more and more of a challenge with low prices as well, no. I think Stefan and Giulia will probably tell us more about that. But how I see the PPA markets is quite active in companies, but I'm seeing very low prices, so I think it's starting to be a challenge.
And I'm happy maybe to oh, I'm sorry.
No, go
Just
go ahead.
no, I was
Absolutely.
just to Fernando's point, as lenders, obviously, we would love to have economical pay as produced PPAs in place for the entire duration of the deal up until that maturity. But we sort of acknowledge that in many cases that comes at a very high price discount, and so there may be a sort of balance between having in place PPAs and allowing for some flexibility basically for the sponsors to optimize really their revenue strategy between merchant and contracted. Now I guess we moved from absolutely not taking any merchant risk to gradually starting introducing some elements of merchant, and again structuring around it and making sure that we have the right protections when we go into merchant tails, or again when we allow for some level of merchant volumes at the start of a transaction. Again, it's something I think very deal specific, but I guess the key message is that we can get there as long as there's a willingness from the sponsor to structure around it, and also something that we look very carefully at when looking at again assets that may change the level of contracted revenues over time is very much the track record of that sponsor and that asset manager in managing similar assets in similar location, implementing strategies. So very, very much focused on, again, sort of vetting the asset manager and their experience.
Thank you. And Pablo, you were gonna
No, I
say.
was going to add that Spain is one of the biggest markets today in Europe for PPAs, and I think that we will continue to see many of them as they are valuable tools to mitigate those price curves and the cannibalization issue due to excess of demand of offer of PV projects. So companies are still looking to hedge their energy prices risk. They are traditionally signed, we're seeing, by big consumers, but we're starting also to see smaller companies looking to sign them too. And as a matter of fact, DLA Piper is the first law firm in the world to have signed its own PPA. So we are in the avant-garde here. We have our own PPA signed globally. I think that regarding PPAs, they are still valuable tools to hedge price risks. And I guess that we will speak later on, if we have time, about the importance of self-consumption, the development of self-consumption schemes in Spain. We are very much behind other countries with lesser resource, with lesser radiation, such as Germany, but that's a different story.
Yeah, definitely. That's definitely an interesting one to touch on, perhaps one that we will expand in the actual event in May. I think maybe if we have time for couple of last questions for the panel. We've touched on throughout the conversation on regulation and regulatory frameworks here and there. So I'd like to kind of like go a little bit more in depth into that one and ask you essentially what regulatory frameworks are on your clients' radar. What are you looking out for? What more is needed? And what would you expect it to come from throughout the year?
Let me start as a lawyer with this one. I would say that the recent extension of the time long stop dates contained in Royal Decree 23/2020 to obtain administrative permits has very much helped to clarify some questions, but has addressed big concerns in the sector. So I think that this is clearly in our clients' radar. When one is investing in a business that depends so much in governmental actions at different levels with powerful lobbies, and paradoxically, the Greens are sometimes making things difficult, it might seem a bit unrealistic to set forth those long stop dates that imply that many projects risk not complying with the long stop dates. So this is being carefully looked at the investment community, because you clearly risk losing the project if you don't comply with them. I don't know if you agree, Fernando.
Yeah, I kind of agree. Look, in terms of this late Royal Decree 8/2023, it came to basically solve several problems that we were seeing in the market. No, basically, were the long stop date and basically the cliff date of June 2025, and they were allowing for 3 more years in order to be able to connect the project. The thing is that the consequence of that Royal Decree is that right now, if you already had what they call the administrative authorization for construction, you actually have up to 27th of March to pick a semester to be able to connect your project. And I think that's going to become a problem for most of the developers that need to, pick a semester, because unfortunately, development is not really predictable, no? And if you pick a semester, you won't be able to connect earlier than that, which I think it's a problem for the rule. And if every developer picks a semester which is very late on the years, that's going to become a problem, because an avalanche of project will come in 2027 and 2028, and that's going to create all sorts of problems. Not only grid problems, but also construction all happening at the same time. What's the maximum capacity for construction that we have here in Spain? So and also, if you run late, that's also a problem, because then you lose everything. You lose your connection. You lose your basically you lose your project. No, so you have to make sure that you do not run late. So I think that what's going to happen is that EPC contractors and banks are going to be picking the developers that have the better projects and the better developers, and the ones that have been able to deliver in the past. And that's what's really going to happen. And the medium low developers that are willing to, go on with their projects, they will see that they will have certain barriers, and they won't be able to, and the EPC contractor will be cherry picking, and the banks will also be doing very careful due diligence to make sure that they won't be assuming a lot of risk on those projects. So good news is that regulation, I think the government really wants to do things well, and regulation is key. But that regulation comes also with some challenges, no? And I think that has to be carefully seen, and we will need to probably try to solve those challenges as they come.
Thank you. And what do the lenders on this panel think about it for Spain and perhaps more broadly in Europe?
Giulia, do you want to go first?
Now you go first.
I'll go first. Thank you. Regulation is very important both for traditional renewables and for new technologies. So let's start with new technologies. I do think that for this to develop, we need support systems similar to what was available for traditional renewables 15, 20 years ago. And only then both equity investors and debt providers will feel comfortable enough going into that. So, and this regulatory support needs to be on a long-term basis, notwithstanding changes in government or otherwise across the various jurisdictions. So that's for new technologies. And then for traditional technologies, what is required is stability in the regulatory regime and no sudden changes, because reality is a lot of liquidity is required for the energy transition, and a lot of financing is required for the energy transition over the next 15, 20 years. Going back to what Giulia was saying in the beginning about various structures, we see a lot of providers, but since this is a global transition towards green future, if there is any jurisdiction that is not being consistent with their approach, investors will just go somewhere else. That's as simple as that, because everybody needs finance.
Yeah. And 80% of the investments needed to finance the energy transition must come from the private sector.
That's exactly that. And and investors need stability and need good visibility, whether they're equity or debt. Over to you, Giulia.
Yeah, no, I'd echo 100% what you were saying. I think regulatory uncertainty makes it really hard for us to take a long-term view. Again, when we are investing in these assets on a project finance basis, we're there for the next 20, 25 years. We want to make sure we have a clear understanding, but also we want to make sure that we benefit from that regulatory stability. So I think that's a very key part of all our assessment, and something that in the past made some jurisdiction more challenging than others. I think also to Stefan's point, again, there are specific tools aside from the sort of regulatory framework. There are specific tools, especially when it comes to new technologies, that can make a lender's life easier. So for example, guarantees obviously are super helpful. We are basically looking now, we're working now towards closing of something which is in the sort of decarbonization of transport space, but we do benefit from strong guarantees there. So I think it's something that again makes it possible for us to invest in something that otherwise would need to wait for technologies to become more mature. So again, to Stefan's point, I think regulatory certainty and also specific tools when it comes to new technologies, very, very important.
Thank you very much, everyone. I think this takes us nicely to the end of the conversation. Thanks again for joining us today, to Fernando from FRV, Stefan from CIBC Capital Markets, Giulia from MetLife Investment Management, and Pablo from DLA Piper. And we look forward to seeing you in Madrid on the 16th of May for our Financing European Renewables Summit. So thank you very much again, everyone, for joining us today.
Thank you.
Thank you, Viola.
Thank
Look
you.
forward
Thank
to
you
the
all.
16th.